What's up? This is your host Non-Fungible TC, Non-Fungible today and Non-Fungible tomorrow. And I think we all can agree that today is a very bloody day. We do have a lot of percentage drop in terms of cryptocurrency, in terms of NFTs. And I just want to say that in these bloody days, I'm still here, right? And unfortunately, I can't do my live stream in the last 2 times because I was involved in something else. But you know, in these days, it is important that we are together, and you know, I just want to show my support to you because I am a retailer like yourself, right? I'm not those influencers that have become a multimillionaire and just to stream because they have contractual obligations telling other people that, oh, I have to, like, if you look at all of these big YouTubers, right? The only thing that you can see is them shielding you about certain services and stuff like that, right? So usually they have contractual obligations and they have to stream no matter what. But for me, even if no one is watching, I still do my stream because I think it's important for us as retail to really know what the market is going on and to really think about the implications of this technology and how to protect ourselves. So basically what happened today is that, and also for my title for this video, would your NFT unintentionally rug pull, okay? So the reason why I set this title today, and definitely we'll go through the Celsius thing, we'll go through the different type of US dollars depeg. But the one thing I came across today is from Confession, which basically says that some months ago, so this is a place where people submit their confessions, right? So this guy this gal basically said, some months ago, I launched an NFT project that sold out. I've worked very hard every day to make this work, yet every day our floor is lower and our treasury is almost empty. I don't know what to do. Nothing I do is working and people are angrily leaving. In the meantime, the Suki founders, blah, blah, blah. So basically, you know, the founder is very frustrated because their treasury, where the money that they make from the mint is running out, and the secondary sales is slowing, and therefore they have less and less royalties to fund the project. Okay, so this is the story. So I just can't help, and this thing just came to my mind today. Okay, so basically this came up when discussing in some Discord channel, but this is just speculation. So all of this is speculation. But if you are in NFT projects that provide utility or a roadmap, you might want to have a closer look at your project and team for an intentional rug pull, right, in the near future. So basically what this means, right? So say for example, okay, when you mint a project that has a roadmap, usually what happens is that they sell the NFT, in return they get Ethereum, right? And using that Ethereum, they now have the budget to fund the operations, right? To fund the roadmap deliverables. So usually that's how it works. So simply put, it's kind of like a Kickstarter campaign, right? So say if a team promises to deliver a roadmap that costs $100,000 to execute with the funds raised from the Ethereum acquired at mint, okay? But right now, because the ETH value is dumping in terms of fiat, right? So they no longer have $100,000 in the treasury and they can no longer, fulfill the roadmap. Okay, so for example, if a project creates a roadmap where they say, oh, I'm gonna deliver $100,000 of value, right? Or the value would be a play to earn game. It's gonna be we're gonna have events, we're gonna have blah 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 blah, all type of stuff. But what makes the world one, right? Money makes the world one. Liquidity makes the world one, especially in a place in crypto and NFT. So imagine if they have raised money and these money are in Ethereum value. And imagine at first they wanted to raise 100,000 in Ethereum. But now Ethereum basically dumps almost like a double, right? So now they only have 50,000 Ethereum, in US dollar value, right? And because they have less and less money, it means that they have less money to hire team members. They have less money to hire artists. They have less money to hire developers to build the project. So if this happens without money, it means they cannot deliver the roadmap, or it would take them longer to deliver, or there is less incentive to deliver the roadmap, right? Before they have, $100,000, but now they have less money. So there is less incentive to deliver the roadmap, right? But at the same time, because everything is slowing down, and we know that this space is so driven by rent sentiment, the team, the community is always like, when do you have an update? When do we get this? When airdrop? When this and that? And with less money, it means that there is less opportunity or less possibility for you to deliver, right? And it will take you more time to deliver. So which basically means what will happen is that the FUD, this is all human nature, and it's funny, nobody talks about it, right? Major influencers not gonna talk about it, but I'm gonna tell you about human nature. And this is what I observe, and this is what I find very fascinating about the space and why I'm here, right? So basically what happened is that FUD will happen and less secondary liquidity for the project, which worsens the situation. So this is kind of like a vicious cycle, right? So to a point, the team will have to tap out and say they no longer could deliver on the roadmap, right? And then they will leave, right? Okay? Because there would be a point where they are so, frustrated, like, oh, I can't deliver, I have no budget. What if they quit the job hoping that the Ethereum treasury could pay off the salary in increment, but now, the value is lower and lower and they cannot make a living? They would leave the project, right? Even though if they're dogs, right? Because they, they physically need to buy food, they need to pay for the daily expenses. And if without that money, the project would die. If the PM no longer deliver, the project is dead, right? So to a point, the team will have to tap out and leave, right? So to be honest, I wonder if a majority of the founders are all in, which as I said, since daily expenses and operational costs could be of a concern for small teams. These teams aren't established Web2 companies with a lot of funding, investment, and a daily operation. These teams are people trying to chase the dream, trying to raise funds for a mint of a project, then use that funding to build something, right? And if that funding diminishes it, and if that funding keeps going lower and lower without any funding to the project will be dead, right? They have no other backing. There's no VC, there's no other investors, or there is no existing revenue from these projects. So that is the whole difference between Web3 project, NFT projects, compared to maybe like a Kickstarter or maybe like investing in stocks, right? So not saying that this would definitely happen, but I wonder, I just want to share this thought exercise. And it's interesting, nobody's talking about this, right? So like, I'm not trying to say that, oh, I said it here first, but what I can foresee is that if this situation keeps going down, if the bear market, is prolonged, and if a lot of these founders rely on the Ethereum minted or the secondary sales to sustain the project, these projects will automatically become unsustainable, okay? And if this project becomes unsustainable, that project could unintentionally rug pull you, okay? It could go to zero value. So not trying to cause FUD, just trying to have a reasonable debate. Tell me what you think. If you watch this, you do not agree, comment below, let me think. Tell me what you think. Another interesting thing is that Otterwu, basically a guy who called out the previous lunar crash in his Twitter thread, he's saying that today there's a chance that there's a SAN token unlocked for a lot of VCs, and because the VCs had made like a 200x with the current trading price, right? There is a huge chance that these VC would unload the position given how the macro is right now, and so he's saying that there's a huge chance that the the price of SAN token would dump in today. So we'll have to see. We'll have to see if the price of SAN token did dump because of the VC unlock. Everything is on chain. It'll be interesting to see. But if you hold SAN token, maybe this could be taking part into your risk, right? Because in a risk-off environment, video gaming, play to earn is probably the last thing you want to consider, right? If the token price keeps going down, you're not really earning anything, right? You're just using your time to play a certain game, right? So anyways, next news, important news. I want all you to brace yourself for impact. Tether depegged, okay? Now they're trying to recover, but they're now trading at 0.9984. The reason why I saw this is that I just saw this on Kwon market cap and just looked into this. And at the same time, USDD. So Tether, the risk is slightly lower because it is backed by commercial players and stuff like that. But the higher risk of this is the Tron stablecoin, which we talked about, right? So it kind of depegged today, right? And the Tron stablecoin is being defended by the DAO, right? So it really depends on how much money they can maintain the peg. If it does not, it will continue depegging. So this is another, algorithmic stablecoin, and it seems like it's going a downward trend, okay? So it is at a 0.97. So this is a new Trion USD. So brace yourself, more stablecoin FUD is gonna come. If we have several more stablecoins crashing, if people are running out for the banks and stuff like that, it gives the government, global governments, or lawmakers a very good case to push the CBDC. Okay, just wanted you to know this. Okay, but it'll be very detrimental to the crypto market because a lot of trading shares are in Tether, USDT. So just wanted to let you know. So if we look at the market cap, okay, slightly recovering. Look at USDD market cap. Let's see if it dumps a bit. Okay, so it's kind of trending according to the price, so looks all right. So anyways, guys, the first thing in these volatile times, the first thing I would suggest you to do is not watch my show, but always go to Reddit. Okay, go to Reddit/cryptocurrency, and that's the place where you can see a lot of daily discussion. You get to know what's the latest FUD. Basically, this one is about it will tell you about, oh, right now it's a Celsius. Okay, Celsius was halted, right? That's the first thing I saw in the morning. So yeah, I just want to tell you that, share with you that, Reddit is a very good place to go in these volatile times to get your news and information. A lot of it could be unsubstantiated, maybe they are FUD, but it's also good to give you different perspective. Okay, so let us look at the market. Europe market bad, is all red. Asian market down. Pre-market right now down. So it seems like we're gonna have a very rocky beginning of the market today, right? Futures plunged with S&P posted fall. So once this happened, and because crypto is trading like tech stocks, right? There's a huge chance that we'll see things going even lower. Okay, and a lot of people are saying that there's a lot of liquidations that could happen when Ethereum goes sub 1,200, and it did go sub 1,200, but not long enough. But if it goes sub 1,200 a bit longer, maybe it will cause even more capitulation. So I was trying to say that my trading strategy for this week is that Wednesday we have the Fed meeting announcement about how they're gonna deal with the inflation, right? So my suggestion is that I was actually waiting for that, okay, and I was actually waiting to see the market, but in between, the price keep dipping, right? And I was trying to trade it, but it's kind of like catching falling daggers, right? And I made a few losses in my trade, but I still decided to exit my position because I'll be very honest with you. There's a lot of things that would cause the market to go even further down in this June. So this is gonna be a bloody red summer. I just want to let you know, because at the same time, crypto market cap, if we look at this, goes below 1 trillion. We have been talking about 1 trillion about crypto market cap, but now it is at 0.9 billion, 0.9 trillion. Okay, so definitely market is not looking good. Yep, 968 billion, so is 0.9 trillion. Market cap is not looking good. Sea of red, everything is down, double digit. If you have been in crypto, you do know that sometimes this is just the prelude, right? There is more dip that could happen, right? So we'll have to see. On-chain data, definitely not looking good for Ethereum, but if it does not look good for Ethereum, it basically does not look good for all the other alts, right? Because there is a trading correlation. Look at this, exchange net flow is negative, exchange reserve is negative. This is the first time when I have been doing my stream when talking about on-chain data. This is the first time when both of these indicators are negative, okay? Look at exchange reserves, right? If you look at exchange reserve by 7 days, and that rate is still going up, it means more and more Ethereum is going to the exchanges. And with more Ethereum on the exchanges, the chances of selling it is higher, right? Look at this, okay? Look at this correlation, okay? More and more Ethereum going to exchanges, right? So that is very scary, okay? And at the same time, on-chain data, but definitely not financial advice. We always like to play games, right? They might give you a bull trap, oh, it goes up, boom, huge downward, right? We never know. But look at net flow, okay? Net flow, never have I seen. Look at this, right? So there was a chance a lot of ETH were taken away. But if you look at 7 days, 3 days, okay, 3 green days, more and more Ethereum is entering the market. And with more Ethereum entering the market rather than leaving the market, it creates more selling pressure. So I'll leave this with you. But I would say there is more selling pressure on-chain analytics. We look at DeFi. Really nothing much to see. It's getting more and more depressing if we look at DeFi. Definitely long time to, it would take a long time to go back to the previous high. So nothing much to say. Look at, and also the thing about DeFi, I did talk about a post today, is that a lot of DeFi protocol relies on lending, right? Borrowing money for leverage trading. But in a market that is so hard to trade, and in the downward market, it basically means that less and less people will trade, right? It's so hard to trade, it's so hard to, they're gonna make even more losses with leverage and stuff like that. With less and less people borrowing money, with less institutions borrowing money, it basically means that the yield for DeFi would go lower, right? Where are they gonna, create the value, right? Rather than lending, right? Where are they gonna generate the yield? Or else, if you see high yield, it basically means that the protocols are printing their own tokens, which is not sustainable, right? So I kind of talked about it, how DeFi protocols aren't really doing, like, banks are working because they borrow money to businesses that generate real money, then pay them back, right, on the loan. But DeFi protocol, you borrow money to people who basically leverage trade, but without generating, real yield, right? Right now, when the market is being bad, right? So that is my concern about DeFi, okay? So I just want to say this again, of course, in a bull market, no one will listen to me when I say this. Oh, you FUD, whatever. But and also a lot of influencers are not gonna say that. They're gonna say, oh, check out this DeFi protocol, blah blah, lots of vested interest. But why I want to say that if one day cryptocurrency can solve this, if one day they are decentralized DeFi in a way can build real life value in terms of you know, making it easy to borrow money for real life businesses, and you know, finding ways to verify blah 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 and so like that, and then really generating value, then I would be very bullish, okay? But right now, bearish. And you know, DeFi protocols are not going to do business development. There are a bunch of developers, right? Programmers, they don't know how to do that, right? They're not business owners. They're not banks, right? So we'll have to see. We'll have to see how the space evolves. All right, NFT rankings. Bad, you know, definitely sea of red. I'm not surprised. A lot of blue chips are not looking good. You look at this, basically the blue chip index, right? We are on a downward trend, even going further down, basically. You know, people rather hold it, they prefer holding Ethereum, simply put, right? Trading volume, you know, downward trend. If you look at this, so this is crypto slam, right? You know, Ethereum, Solana. So this is not a really helpful indicator today because everything is up, right? According to them. But the reason why it is up is because a few days it dropped, right? If you look at this, right? This is the unique buyers, right? In the last few days, unique buyers went down. You know, definitely down. Volume went down a bit, you know, in terms of the sales in US dollar. This is Ethereum. Look at Solana. Same, huge breakdown. Okay, so definitely for NFT markets, definitely not looking as hot as before. But there are positive news in the space. You know, the technology has not changed. But the only thing is that Ethereum 2.0 might be delayed. So we'll have to see. I'm going to talk about more. But I want to move on to our news today. Basically, for those of you who are new about, if you don't understand the stake Ethereum, this is a great article which I post in the link below. You know, small cap scientists basically talked about the stake Ethereum and ETH peg, right? And how, you know, Celsius is losing money. So too long did not read. Basically, what happened is that Lido protocol, which is a borrowing protocol, I mean, it is a protocol where you could put your Ethereum in return for stake ETH. And by sticking your ETH in the Lido protocol, basically they're gonna use it to run the Ethereum 2.0 validation, right? When Ethereum 2.0 comes. So holding the stake ETH, basically what happens is that when Ethereum 2.0 comes, you can redeem your stake ETH to Ethereum, okay? When Ethereum 2.0 comes. So basically the price of this has a lot of factors, right? The peg, so everything is on a smart contract, okay? One stake ETH equals to one ETH, okay? Nothing will change it. It's never gonna depeg technically, right? Every time, I mean, when the Ethereum 2.0 comes, you can always trade one stake ETH for one ETH, okay? But the problem is, if Ethereum delays a bit further and further, and if people do see there's an arbitrage opportunity, or if they do see the Ethereum price would dump even further, what they'll do is that they might sell the stake ETH at a discount in order to get Ethereum and sell it in the market and then buy in when Ethereum is lower, okay? So basically what happened is that according to the article, you know, Celsius has been paying his their 10 plus yield, like 10 to 20% yield to people who stake Ethereum on the platform, you know, and getting the yield actually from the Lido protocol or something like that, right? But because the stake ETH is trading at 0.8 to 1 ETH, so they are making like a 0.2 loss for Ethereum. And if people were to remove the Ethereum from Celsius, basically Celsius will have to pay a loss in order to, you know, give them the money back, right? So what happened is that a while back, according to this article, you know, certain VC funds, certain research companies decided to, like whales, okay, market makers, decide to sell, you know, ETH at a loss at the same time. And at the same time, I don't think they sell it to deliberately crash this, but you know, a lot of things cause it to sell, right? Oh, Ethereum 2.0 has more hiccup, right? So that's why they sell and stuff like that, and a lot of money-driven reason. And now Celsius, and people can see that, right? And then people are saying that, oh, Celsius is having a liquidity problem, okay? And people are withdrawing, right? Because people were, you know, spending this. And once they withdraw, what happened is that Celsius decided to halt their withdrawal today, which basically caused a lot of fear in the market. People were saying that, okay, Celsius can, you know, had this liquidity problem. You know, your crypto is basically gone and stuff like that. They are gonna be liquidated and stuff like that. And therefore, you know, Ethereum keep dumping, right? You know, because they'll have to liquidate the positions, right? So interestingly, so this is the whole picture of the stake ETH and ETH, okay? but I suggested to read this thread, really helpful. So what happened is that Nexo, which is a competitor, proposes buyout of Celsius asset as crypto lending rival hot withdrawal, right? So Nexo is another competitor. They proposed that it seems like they might have a liquidity issues. So they proposed that maybe they would they're opening buying the company, right? So this is an interesting news, but it seems like certain VCs were trying to move money to Nexo to kind of protect it as well. So maybe Nexo has some certain exposure because everything is interrelated, right? One thing fails, everything starts failing, right? Same for the Luna crash, right? When Luna crashed, a lot of people crash, stuff like that. So VCs will be more aggressive in taking profit, or not taking profit, but preserving the capital. And in the end, it will be the retail holding the bags, right? So that as a retail, I think it's important for us to stay, afloat and also to, check out the news on a daily basis, right? So today what happened is that Celsius stopped people from withdrawing, but at the same time they moved 320 million in crypto sent to FTX, right? And the reason why people were saying that they are moving money to FTX is that because they have to defend the position, right? They are using it as a collateral for the RV position in core DeFi wallet, okay? So that's a lot of money, okay? So if they get liquidated, a lot of crypto will be sold, okay? So that's why there is even more and more downward pressure, right? And so there is a lot of things working. There's a lot of forces that could make the market go further down, simply put, if you don't want to go through all the details. But so I would say be careful. And I did say that, Ethereum 2.0 Websyn merge was kind of successful. The testnet merge was successful, but it seems like in hindsight, the developers looked back and they found out that certain proposals were missed, certain blocks were missed, right? So it seems like it might not be as successful as they initially envisioned. So that's why some core developers decide to delay the difficulty bomb for 2 months. So the difficulty bomb basically kind of dictates how when the merge will happen, right? Okay. So it basically means that there's a chance that there will be a longer wait for the merge, right? So before the merge was sometime in August, right? So now if it's the difficulty bomb was delayed by 2 months, may it be the end of this year? Okay, could it be the end of this year? So this was one of the really bullish events, right, for Ethereum at the same time. But now it's been delayed, and now with so much macro looking bad, and a lot of things that are happening in the crypto market, there's so much downward pressure, okay, which caused this. Some people would say once in a lifetime buy opportunity, but for me, I would say this is a once in a lifetime buy opportunity, but in the short term, loss of volatility. Maybe as retail, it'll be smarter for us to sit on the sideline to see when the market, because when everything kept crashing, right? It would take some time for retail to come back in. Faith takes time to be restored, right? So I would say, even with ETH 2.0 now being delayed, it will be better if we be on the sidelines to observe further. That is in good conscience what I would say, right? Because in no good conscience, I could see a possible outcome of another bull market tomorrow. There could be a relief rally. But as fast as that relief rally could go up, as fast as it could go down, okay? So guys really have to be careful. And as according to this article, USDD stablecoin falls. So which I just said, I do think that there's a chance that there is an attack on stablecoins. And if these algorithmic stablecoin fails, there is more pressure on regulations, right? Consumer protection and stuff like that. And all of this creates a downward pressure for the whole market in general. So I like personally deep inside, I do think there's a huge downward potential. Okay, Kwon accused of cashing out 2.7 billion before USD collapsed. Terra founder says allegation is false. So basically, there's a thread saying that Kwon actually secretly were cashing out, and also the SEC were investigating it as well, and they have found some evidence. But Kwon said that these are false, and he doesn't really care about money much. Okay, really. So a lot of negative headlines. So but the reason why I want to do this video stream is that just be careful, guys. Like in no good conscience, I could tell you that we're gonna see a relief rally immediately, right? Especially on Wednesday, we have the Fed announcement on how they're gonna approach the inflation, and so far everything that we've seen is negative, right? With an 8.6 or 8.2% inflation numbers, Fed is gonna do something aggressive. There is only more and more downward pressure, and just be careful, guys. Yeah, I mean, to a certain extent, yes, inflation is strong. US dollar value is going down and down, but it seems like holding USD or stablecoin might be the best pick, right? And as I said all the time, like if you look at this, the top 10 coins, if you see more and more stablecoin in the top 10 coins, it basically means that more and more money is in stablecoin. It is only until when we see these drop, okay, in the below top 10, then that will be a good time to maybe think that the market has turned. But right now everyone is on risk on, everyone is hugging stables, okay, even though some stables are depegging at the same time. So it's doom and gloom, it's really doom and gloom. But all I can say is stay safe. DCA, yeah, absolutely. If you have great conviction, it is not easy, but I definitely think DCA is important. But if you have great conviction that it will drop further down, and in the past few days, I started DCA into Ethereum, but the dumps were quite, like I DCA'd it in a way that I was kind of just for fun, like, oh, what if it dropped below 1,300? It did. What if dropped 1,200? It did. So these are some troublesome DCA numbers in the short term. So if you can't stomach that risk, okay, and always there is definitely gonna be a green day. There is gonna be double, 3 digits, whatever upward side, okay. And always, I think this is a very good reality check, okay. The thing is, why are you here in the first place? If you're here just to make gains, maybe now is not a good time unless you want to short it, but then there's a lot of volatility, right? But if you're here that you believe in the technology, or if you're here because you want to learn a new technology, because there's a sure way to make money in the bear market, and that is using your knowledge of cryptocurrency and teaching it to to other people. You could be an educator, okay? You could be you could teach people how to make NFTs, make courses on that and make money on that, right? There's so much ways to make money in the bear market using the knowledge that you have acquired in the space because you are so early, right? So if you have conviction in the space, and I do think that this is definitely once in a lifetime opportunity, but cryptocurrency never fails to amaze how high it could go and also how low it can go. So I've always had that mentality. But I always think that this is a good adjustment in terms of, before I wrapped up, is that always remember, if you have trouble paying bills, okay, if you have trouble, doing certain things, maybe it's a good time to cash out and come back later, right? You're not gonna miss the bull market by a day or something, right? If you do have some disposable income that you can afford to lose, and that, think about it, if you have disposable income that you can afford to lose everything, then maybe DCA is a strategy. But if you have disposable income but you cannot afford to lose those disposable income, I would suggest you to wait a bit and observe the market and maybe come back when the market has kind of stabilized, when we kind of see that lower low, okay? So yeah, that's it for today's stream. I hope you enjoyed the stream. I do think that the biggest conviction is not YouTubers or influencers with thousands of followers, 100,000 followers continue doing the stream. The biggest conviction is that even if, for example, if you're a content creator, that you're still creating content, even if no one is watching in such a bad market, with such as seeing your portfolio losing a lot of money, but still doing the stream, hoping that people can see the information and understand why the market is down and protect each other, right? So this is your host, Non-Fungible TC. Unfortunately, tomorrow night I might have a meeting, so I cannot join. I cannot do a stream, but I hope you appreciate this. So like and subscribe, comment, whatever. If you need someone to talk to, I'm here. If you wanna some support or whatever, yeah. So this is your host, Non-Fungible TC, signing out.